Right, one thing you all must get to know really is the basics of the time value of money, both in exams and in life, really. So the first thing we're going to look at, well, how can you calculate a value in the future? So how can you evaluate what 1,000 will be worth in 3 years' time, given a certain interest rate, which we're saying is 6%? Well, there's the rather scary looking formula. Future value equals present value times 1 plus r to the power of n. It's easy though in reality. You take the present value, so that's the 1,000 now, times it by 1 plus r. Well, r is the interest rate, so 1 plus 6% is 1.06. So times it by 1.06 to the power of n, so that's to the power of the number of years, if we're talking in years, which we are this time. So that, multiply all that through in your calculator, and you'll get, with a little bit of rounding, 1191. Linked to that is working out the present value from a future value. So what would the present value be of £2,000 receivable in 5 years' time? Because obviously it's not worth as much now because you don't receive it for another 5 years. And the interest rate is 8% a year, or the discount rate is 8% a year. So it's not worth as much now as it is in 5 years' time. So what is it worth now? Well, it's kind of the same formula, but you divide instead of times. So you start off with your future value of 2,000. You divide, because you're going backwards, you're discounting. So divide by 1.08, 1 plus the interest rate, 1.08, to the power of n, so the number of years, 5. And if you put all that in your calculator, you'll get 1362 with a bit of rounding. Final thing I want to look at today is how to value a perpetuity. Well, what is a perpetuity? Something that you receive forever. So let's say we receive £500 a year forever and the yearly interest rate is 10%. What's that actually worth? Well, it's easy. You take the amount and you divide it by R, the interest rate. So divide it by 10, 0.1, the interest rate. So 500 divided by 0.1 will give you 5,000. That's the value of the perpetuity.